first, I did say that banks have been in search for liquidity since the global credit crisis took hold, and they've been selling off their private equity portfolio to secure that money. But the thing is, the ongoing volatility in the global markets is making it difficult to price the assets. Well, with us for more from Hong Kong is Lucian Wu, the managing director and head of Asia at Paul Capital. The firm is a private equity secondary fund management firm managing more than $6.6 billion globally. Good to have you with us, Lucian.
Morning, Catherine.
So how is the secondary private market looking now? Because I know at the height in October, when that was pretty much the peak of activity, everything stopped because of the stock market volatility.
Well, the private equity market, as everybody knows, it's going through a bit of a slow phase at the moment, both in terms of fundraising activity and in terms of investment pace, especially in the buyout sector. Now, the secondary market within the private equity market, it's a bit of a niche market inside it. What we do is essentially we provide liquidity to investors in an otherwise illiquid investment product, i.e. private equity investments. Typically, it goes on for, if you invest in a private equity fund, you're pretty much locked in for 10 years. What we do is, we come in and, if any investors want to exit or liquidate their private equity portfolio before that 10-year time frame, what we come in is we provide a liquidity option.
But first, you got to get the pricing right. And how do you do that amid the stock market volatility?
Good question. I mean, with the extreme volatility, it's kind of unprecedented in a lot of ways. It's making pricing assets a bit of a challenge. But because we've been in the industry for the last 20 years or so. Paul Capital, we are one of the pioneers in private equity in the U.S. In fact, that's where the market actually started from. But we have been investing in the past few months, or looking for investments in the past few months. In fact, going back to your question on banks and financial services, the role we play is, we come in and we can actually look at these assets on the balance sheet of these banks. And also in terms of mergers and acquisitions, banks typically would have a fairly sizable portfolio of private equity assets that they need to deal with, because as you know, no banks would buy another bank for its private equity portfolio.
They wouldn't. But the interesting trend is it's not just the banks now that are interested in offloading their private equity assets, because you got pension funds, endowments, and foundations offering private equity to other investors.
Correct. As you know, I mean, if you take Asia, for example, you've seen a pretty dramatic growth in private equity activity in the region, both from an investor-based perspective as well as from an investment perspective. The kind of private equity pool of capital under management now in Asia is close to $200 billion. And the secondary market, as a subset of that, typically in the more developed markets in the US and Europe, it is sort of between 3 to 5% of the market. And in Asia, it's not even 1%. It's still a very emerging kind of small market, but there's a lot of room to growth, because there's a natural time lag between primary and secondary market, like every other market, and private equity market is no different in that respect.
So how do you make money out of this? We got about a minute here. Which funds and in which underlying companies are you interested in?
I mean, the way we look at it is, we provide a solution for our clients, for our customers, who come to us and say, hey, look, we have a private equity portfolio within our larger portfolio. How can you help us devise some liquidity options? And that's what we do. And that's in terms of our clients, that's the service we provide.
Is there any particular industry that you're interested in buying from these investors wanting to sell in?
I think we look at it more from the perspective of the sellers, instead of us focusing on particular sectors. I mean, we don't really have a strategy in terms of bias towards any particular sectors or countries, but we look more to the customers, to the client, in terms of what he's looking for, what portfolio he has, and we look at it in its totality.
Okay, well, thank you so much for joining us. Thanks for those trends. Do appreciate the views. Lucian Wu of Paul Capital here in Asia.